Okay, let's get right into the stock market technical analysis. We'll look at some broad market indices, some individual trade ideas. I want to point out interest rates, the dollar, and we'll wrap up there. Guys, if you're finding value in the content, please feel free to hit that thumbs up button. It's supposed to help the channel. I appreciate it. Thank you very much. And if you're interested in joining the private member group, in there, I'm commenting on additional trade ideas. I put out additional private member group videos here and there. $5 a month. You can cancel anytime you want. So not a whole lot of risk on your part to try it out. Check it out. Link in the description below. Let's get into it. Triple Qs, guys. So no change today on the tech stocks. Monday morning, we're opening up. There's really no change. Again, I think we should continue to see rips, especially pre-market rips, get sold into. Again, the markets are technically set up bearish. And when you see pre-market rips, recognize that pre-market, like Sunday night, stuff like that, typically very low volume, not a lot of institutional participation. They can't move big money around in the pre-market, and especially on the weekend, futures and things like that. So when you see the market open on Monday, that's when the institutional players can come out, move their big portfolios around because they have liquidity. And, I'm continuing to watch the behavior there to see if they continue to sell into the rips. So far today, we gapped up this morning and we're selling into it. So that's what I'm looking for. It continues to further validate. I believe there's more downside. On triple Qs, though, we're really just stuck in this range. All right. High end of the range is about 448.50, and then low end of the range about 433.50 or so, somewhere right in there. And so we need to break this range. All right. To the downside should indicate that we're going to flush out, probably push down to the 200-day moving average at kind of a minimum move. I think we'll probably break it. This range is, been there for a while, so there's lots of longs there. If you break, I believe you'll probably have a pretty quick move down to the 200. Buy program should step in at that 200, and you should see a bid at least there, a tradable bounce. Doesn't mean it's going to be the bottom, but when we get down there, or if we get down there, because again, I don't really know, I'm just using the charts and what they're telling me right now, then we should see a bid. So that's it on triple Qs. Besides that, no change, so we'll move on. Interest rates continuing to rise. Here's the 10-year Treasury. So again, most mortgages, car loans, credit card rates, a lot of that is set off of the 10-year Treasury interest rate, and it's continuing to rise higher. So again, everything that requires borrowing money is becoming more expensive. That should continue to put pressure on interest rate sensitive stocks like home builders, and really tech stocks as well. Small caps, very interest rate sensitive as well. So those are continuing to rise today. We're seeing a new high. So again, as long as rates are rising, it's bearish for the markets, and that's really it. So we'll continue to watch that. We're not too far if you really kind of zoom out. Here's the highs that was set back in October of 2023 on interest rates. You go to the SPY, or you can do the SPX. Here's October 2023. Essentially, that's kind of the lows of this latest push up, and we're just barely below those on interest rates, and yet markets are way off sides. All right, so I think markets need to kind of correct, and bare minimum the 200-day moving average is what I'd be looking at, and it looks to me like we're still heading in that direction. So more downside. Okay, and then the dollar here, you can see the dollar is continuing to spike higher as well. So rising dollar. Things that are priced in dollars, stocks are priced in dollars, commodities, those all should see some pressure as the dollar's rising. So, that is the state of the markets in general right now. So I'm looking for, rallies into resistance or rises should be sold into. So it's sell the rip market right now as far as I can tell. So speaking of that, let's look at some short trade ideas and then we'll wrap up. Okay, Schwab, SCHW, spiking up today, up about 3%. I think this morning it was up, almost 5%. Really just a pop earnings, all right? They came out with earnings. So we're spiking on earnings. We are making a new divergent high. So you'll see here, uptrend line on the daily chart. And on this pop right here, we kind of put in slightly higher highs above those previous highs. Momentum continues to drop off. We're not seeing any new highs in momentum down below with the PPO and the RSI. So this is a divergent high, which has a high probability of getting sold into. All right. And then we also have this uptrend line right here to watch for the break of trend, which would give us a sell signal. I took a starter short on this. I'm, on the spike high in earnings. I shorted it, just a starter short, and then I'll add to it if or when we break this trend line. So that's a high. It's definitely an aggressive trade because we do not have a sell signal. We got a spike on earnings, and there's no indication that this has broken support. But given the state of the market and what I'm seeing in like JP Morgan and some of these other financials, I think this one's, I'm looking to front run it, potentially a higher profit mark on that. And so again, if you're conservative, you need to see this trend line break for the sell signal. But the divergence is intact, and I think it's coming soon, so we'll just wait for that. Qualcomm, all right, semiconductors. The semis have been pretty much leading the market with the AI hype. I think some of that's starting to kind of fade, but we still haven't seen the king of AI, NVIDIA, really break in any meaningful way. So that needs to break in order for this AI trade to really start to falter. But the charts tell me that that's coming soon. Here's Qualcomm. You have this upward price channel. So it's not really a bearish rising wedge or anything. It's really just an upward price channel. We do have momentum just continuing to drop. All right, negative divergence in this channel, but no sell signal. So we need to see this trend line, and they're holding it like a champ. You can see buyers are just sitting on this trend line, buying at the trend line. And so you need to see that trend line break for the sell signal. So the setup is there with the divergence, but no sell signal. So continue to wait if or when it breaks, because eventually this channel is going to break. I mean, that's the truth. But, when that breaks, I think we can flush down to 157.77. And we have the 200-day way down below, so it could be quite a big drop, when we get price action going in that direction. So, again, just waiting on that one. LPX, this is forest products. This one, again, rising dollar should be bearish for forest products. On this one, let me kind of clean it up. You've got daily price channel or trend line support kind of moving up, support, and we're just now breaking it. Really held it on Friday. Today, it's starting to break. So more selling, and especially if you see impulsive selling today, that would be a sell signal. As of right now, it has broken that trend line. So it is a sell signal as of right now on the hourly chart. Just on the daily, since the day's not over, you don't have a sell signal. I typically will jump in a little early, and I don't wait for the end of the day, but I do want to see I want to see the selling kind of stay where it's at and continue. All right, if they kind of hold it right in here and maybe even start to bid it up and keep it really close to the trend line, I'm not interested in it. That's not an impulsive sell signal. But in general, there it is. Divergence, it's pretty much there. You have equal divergence. Meaning that you have momentum, price making new higher highs and momentum making equal highs. So that's still divergence. So again, that is a sell signal. This isn't really one of my favorites, but I did want to point it out. Gold and gold miners, they're all selling off, kind of coming in. And that's what I was looking for. I kind of talked about how I didn't really want to chase the breakout in gold. Here's gold futures. If I roll out, you can see we did have a breakout. So this is a daily chart really going back to 2020. And you can see basically there's a clean and clear breakout. Look, there's a reaction on it, but it did break out. I think we're going to come back and test that breakout from above. So as of right now, that would be the area I'd be interested in probably buying gold. And then gold miners, when I look at like GDX rolling out, it looks to me like you had a breakout here on the daily. So you got some resistance, there's another reaction, there's a breakout. So again, I think we come down and test that. They might even undercut it and hit the 200. That's possible. So I'm not buying gold right now. I'm not buying gold miners. I think they're going to come in a little bit more, and then we'll start to look at them and see if there's anything there. Again, if the dollar continues to rise and interest rates continue to rise, we're likely going to see stocks sell off pretty impulsively. And that includes gold mining stocks. Portfolios that own, diversified portfolios that own a bunch of stocks. If they get margin called, they're going to sell what they have. They're going to sell what they can. Oftentimes they'll sell what's working. or forced selling by their brokerage. That includes gold mining stocks. So we need to kind of see how this market starts behaving with the rising interest rates and the rising dollar. Here's DVN. This one, I am out of this trade. This was a good trade. Again, this is a oil stock. On DVN, clear. Here's a daily chart. Look, resistance, 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 bullish divergence, breakout. This is where the trade was highlighted, saying that we have a good long trade here, or a potential long trade with the breakout. And from really that breakout, the thing ran really to the highs, 22, 23% basically. All right, I think this trade is now played out. We're going to there's no sell signal, and I don't really have negative divergence on the daily. If I flip down to the hourly chart, you can see we do have that negative divergence there on the hourly. See the momentum dropping? And while price really was higher, these are all divergent highs on the hourly. So I think we come in, okay? And if I go to the daily, there is this uptrend line on the daily. So I do think we minimum come into the trend line. But I think we're going to break that, actually. You'll probably get a buy, so another 3% down. I think there'll be some buyers there. You probably get a little bounce. I think we're going to break, though, and probably start to hit some of these, horizontal support levels, maybe the 200 days, something like that. So I am out of this trade for right now. And that's all I got for this morning, guys. I'm going to get the video out. If you're interested in additional trade ideas, because I put out a bunch of them on Friday for the private member group, feel free to join up. And I will catch you guys on the next one.